What should Indian investors do? We've got Ashi Anand joining in on the show to talk about exactly that. Ashi, hi, afternoon. Good to have you on the show. IT up next, I guess, Ashi. Starting off with TCS, tell me what's the expectation this time from the pure play services business?
Oh, hi. Firstly, thank you so much for having me on the show. In terms of IT services, I think the outlook broadly does remain fairly similar. You have had quite a few years of weak discretionary spends. That is something that we don't really expect to see a substantial change on, especially in the context of Trump tariff and various economic uncertainties driven by what we're seeing coming out of the US. We don't really expect US corporates to really release large kind of IT spending budgets. Accordingly, we probably are going to go in for a period of 1 to 2 more quarters before we get clarity on how IT spends are going to emerge. So I think in terms of the IT results which are coming out, we probably broadly kind of expect them to be fairly similar to what you've seen over the past few quarters. And this kind of long pending revival in discretionary demand, I think we are unfortunately going to have to wait for a few more quarters to actually get visibility of that a bit more clearly. We have seen Accenture's results, and those clearly are not very, as in those don't necessarily point to a very strong pickup either.
Good afternoon, Ashi. Thank you so much for joining us. In fact, talking about IT sector, let me take that question to Shivangi and ask her on the charts, how is the IT space looking to you? In fact, the index is under pressure. What exactly is happening globally as well? But what are the charts indicating? Do you think that now that we've seen a rebound, it will sustain for the IT space? And in the IT space, which one do you like?
Pointed out, there has been some sort of a pullback from the lower levels, but overall IT space has been underperforming from the last 4 months. And we are actually forming lower top, lower bottom on the monthly basis for Nifty IT. So overall, we've seen that the strength is clearly lacking over here, and momentum, any if built up, has been faced rejection over here. So be it the heavyweights or the smaller names, all the IT names have been witnessing some sort of a pressure. And I believe there is some sort of global tensions which needs to cool off for, again, IT to pick up strength.
Right, so that's the take coming in on IT space when you talk about them in the charts. In fact, let's talk about the QSR space. You have MK's note that has come out on the QSR space where they believe that the growth slowdown for the Indian QSRs is coming to an end. They see potential for a return of the mid-teen growth in FY26 for QSR beyond the muted Q4 numbers. So you have the Jubilant Foodworks that is buzzing in trade. Westlife Food, Devyani International, they have an ad rating on all of those counters. Not the quick commerce space. Ideally, it would be the QSR space like the Westlife Food as well as Jubilant Foodworks, as well as Sapphire Foods. They have a buy rating. And actually, that gets me to the point. You think now that this time around, it will be the QSR space that will steal the thunder away from the quick commerce space and some of these platform companies, because given the fact that there was a rage for this QSR space and we've all forgotten about them.
Yeah, sure. No. So that is very interesting. So I think firstly, you just have to look at these very differently, right? Quick commerce is a brand new industry. It is platform business where competitive dynamics, the longer term kind of potential of that industry is still being kind of shaped. You have the potential for a decade of supernormal kind of growth. And how that industry is going to shape up is obviously going to be very different. Coming to kind of QSR. Right? QSR is something which is clearly one of the best plays on discretionary spends. And what you have seen kind of globally is that when an economy crosses a $2,000 per capita overall GDP, you tend to see sharp increases in discretionary spends, as until $2,000, you're pretty much spending on basic survival. There's only that much incremental left over for discretionary. But as incomes keep rising, consumer aspirations keep kind of increasing, and kind of dining out, right, is a very, very clear area of discretionary spends that people tend to allocate more money towards. If we just look at kind of Indian spends on foods, it's about 5% of overall food spends are on kind of restaurants. If you compare this to China and the US, where you're looking at about 50 to 60% of spends on food being outside, it really shows the kind of sheer scope for kind of growth that is available. You have seen clear Indian preference towards willing to kind of experiment with various kind of QSR chains. So I think the longer term growth potential is clearly very attractive. There are strong underlying growth trends. What you have, however, we have been through a 2 year period of kind of relatively weak discretionary spend growth. We need that to really come through. But the longer term outlook for the space definitely is something quite interesting. In terms of stealing the thunder from quick commerce, we don't really think so. Quick commerce, according to us, is a much larger opportunity.
Yeah, sure enough. And, just the churn in the market and some of these oversold names perhaps are seeing a little bit of a bounce coming in. But what's actually bouncing up today is Titan. The total standalone growth in the Q4 that they posted in their updates was a good 25%. The jewelry segment revenue growth of 25% again. And watches, eye care, the emerging business, they've all seen some good growth. In fact, let me take it across to Snehi and get in more details in the quarterly update from Titan.
Well, absolutely. So good set of Q4 updates coming in from Titan, and especially if you compare it with Q3, very good set of numbers coming in. On a standalone basis, the growth in the quarter has been 25% year-on-year, and overall FY25 growth for the standalone business has been 21% on a year-on-year basis. In Q4, Titan has added 55 stores, which brings their total store to 2,989. Let's talk about the jewelry segment now. Overall growth has been logged in at 25% on a year-on-year basis, and good growth coming in from the jewelry business this time. Growth has been led by gold jewelry as well as gold coins, and elevated gold coins have led to sluggish consumer demand at lower price points, but that's not the case at higher price points because they have seen double-digit growth when it comes to higher ticket sales. So that is looking good when it comes to jewelry sales. Studded jewelry has registered low double-digit value growth. Solitaire segment has flipped around. Remember, in Q3 this was lagging behind, but Q4 numbers for solitaire is looking very good. They witnessed a turnaround with growth in both buyer base as well as value. Overall, like-to-like sales for jewelry has grown at 15% year-on-year. Tanishq has added new stores in Sharjah, Atlanta and Seattle, and 16 new additions when it comes to store additions when it comes to the jewelry segment. Watches, let's talk about watches. Overall growth has been 22% year-on-year. Titan, Fast Track, Sonata, they've all done very well. Growth of 18% year-on-year. Helios, Titan World and Fast Track have also seen healthy double-digit growth. Eye care overall growth has been 19%. Healthy double-digit growth coming in for Titan Eye Plus as well, especially from its international brands. E-commerce has emerged as the new driver for the sunglasses segment, and Titan Eye Plus numbers are also looking very good. Emerging businesses, when you talk about that, fragrances was up 26%, fashion accessories have done well, a 12% growth. Taneira sales continue to be in pressure and they were also down 4% on a year-on-year basis. This is in line with Q3. Carrot Lane also overall growth has been of 22%. Healthy growth in studded portfolio has been seen. What brokerages are making of this? Macquarie has maintained outperform with a rating target price of 4,000 rupees per share. Morgan Stanley has maintained overweight with a target price of 3,876, and Citi has maintained a neutral with a target price of 3,550 on the back of Titan's Q4 updates.
Okay, that's pretty much a bullish stance coming in on Titan after the quarterly updates. But Ashi, what is your own sense? Jewelry companies are reporting very good numbers in terms of their quarterly update, and would you say that Titan still holds the sort of baton when it comes to jewelry companies? And do you like that space as an investor to begin with?
And we tend to kind of look at kind of value quite closely. And we have been willing to pay up for kind of Titan simply given its kind of very stellar execution over sustained periods of time. And if you are seeing kind of the current quarterly results as well, right, you are seeing that sustain in an overall environment where a lot of sectors and companies are struggling to kind of grow. 25% kind of growth is clearly very attractive. Now, one important element to just kind of understand is that a reasonable amount of this revenue growth that you're seeing, both for Titan and for other jewelry companies, is coming out of pricing growth because of the sharp increases that we have seen in gold prices. That does clearly indicate that kind of underlying volume growth is kind of lower. But even in that context, right, to be able to kind of grow volumes when you have seen sharp inflationary pressure on underlying gold prices itself is kind of quite strong. I think the larger theme that you're kind of seeing play out in jewelry, and you're probably seeing this play out in certain other sectors as well, is not only is there underlying strong kind of demand for that particular segment, but you are seeing a larger shift away from the unorganized towards the organized sector. You're seeing this very clearly in jewelry, you're seeing this in real estate, you're seeing this in a number of other sectors. And I think that is what leads to a fairly kind of favorable outlook. In a kind of a economy where a lot of your FMCG companies very often struggle to even grow revenues at double digits, to have a kind of company as large as Titan, right, being able to quite consistently grow in the mid 20s is quite interesting. And they have kind of indicated that they expect to be able to do so over the longer term. And according to us, that actually allows these current premium valuations to sustain.
Right, that's the take coming in on some of these jewelry counters. But let's talk about what's exactly happening in the market at this point in time, given the fact that you're seeing a good bounce in BEL on back of the fact that it has bagged a mega order. You're also having good up move in ONGC, Aisha Motors, Grasim, L&T. Those are some of the counters that are seeing a good up move in trade. Kunal, what's your view, especially on the defense pack, given the fact that it's seen a sizable correction, it's recovered also from those levels? Do you think that now is the time that you can look at some of these counters? Because there's a lot of talks about looking at domestic-oriented companies.
Yeah, I would be, quite bullish on the entire defense pack, and I think what we've seen over the last 9 to 10 months or so, I think from March or April 2024, is that these sectors they were the first ones to try and go into a corrective wave. There was a point where stocks like Mascot Dock, Cochin Shipyard, I think GRC, etc., they had corrected by 40-50%, some of them even more. And now these stocks have gone through a turnaround of sorts. So from the Jan lows for many of these stocks, we've actually seen a 15 to 20% broader recovery for the most of the defense stocks. And in that space, we've seen two of the key stocks which have started to show signs of strong outperformance. It started with BEL being one of the stronger names, then moved on to Mascot Dock, which I think at one point came very close towards breakout of the previous major highs for itself. And then you've seen HAL also trying to pick up pace and then crossing those levels of 4,000, 4,500. So I believe broadly that's a strong indication that we are looking at a revival and a very strong revival cycle potentially for the entire defense pack.
Right, okay, that's the take coming in on defense. In fact, in the meantime, Cyient, that's one stock which has been in focus. They've launched a semiconductor arm as well. And Anurag Shah, my colleague, caught up with the Executive Vice Chairman and MD at Cyient and also the CEO. Here's a slice of their interaction.
We believe that this market will grow to about a $2 trillion market, just the chips. And of course, the electronics around the chips will go to about a $10-12 trillion market in the next 5 to 7 years. And that's the opportunity that Cyient Semiconductor is trying to address. We will be able to provide custom chips for various applications. And these applications need custom chips because of power reasons, because of cost reasons, because of performance reasons. And that's why we're very excited that we're creating a separate subsidiary to address this very, very large opportunity.
Okay. This separate subsidiary, from India point of view, how much scope do you see, and means on which segments or which sectors your focus would be initially?
So, I mean, we see a huge opportunity in India. I think the semiconductor market locally is also growing. It's probably go to 300 billion in the next couple of years locally. Well, our sectors are focused on the power semiconductor space. Like Krishna talked about, the semiconductor space today is about 600 billion today, growing to 2 trillion. But the power semiconductor space is probably about 60 billion in the next couple of years. So the goal for us is to focus around power and power efficiencies and saving on that. If you look at that market, really the top areas for us is around industrial, and inside industrial really focused around the AI power for data centers and also the industrial automation. Both require a lot of power, a lot of wastage is happening in power, and to help improve the efficiency of these power chips, we'll focus on some custom silicon like Krishna talked about that will help improve the power efficiency of this.
Okay. So, how much capital you will be requiring for this new subsidiary, and how you will be going for some fundraising also? And can we see going ahead the listing of new subsidiary also?
The Cyient understand board in our previous board meeting has committed to up to $100 million or up to about 900 crores of capital infusion as and when the business will require it. We're still working out the business case and the plans on when we'll require it. The second step is, of course, they've also given us the authorization to look at external capital, and we're working on what is the need and what are the sources of that capital. Now, listing is a little bit premature to talk about, but we'll look at what are the various avenues that we have for capital, because this is a business that has tremendous potential. Of course, will require the capital, but I would say maybe it's a bit premature to talk about listing.
Right, that's the management of Cyient as well as Cyient Semiconductor talking to ET now. But Shivangi, let me come to you and let me get your views actually coming in on the pharma space. How is it looking to you on the charts? And when I talk about pharma, it's not the large cap pharma space. I want to know like the likes of Pyramid Pharma, for the matter of fact, Sovent Pharma. How do these pharma counters look to you on the charts? I believe you'll have to unmute Shivangi.
Higher pharma stocks, and I would like to extend this to the diagnostic space stock as well, because these are some pockets which are looking very nice. Now, of course, pharma has been highly volatile in the last few sessions, coming from the trade tariff tensions, but the hospital space stocks have been looking quite resilient, and even in such kind of a market scenario, they haven't witnessed such a gap down and gap ups. So Apollo Hospital is one such stock which is on my radar and has been consolidating at the higher zones on the daily frame as well. Now, the last 2 days have witnessed good volumes on the long side, and we are witnessing fresh buying at these zones. So definitely this one's on my radar, shifting focus to the diagnostic space. Now, Apollo Hospital is getting ready for 7,020, 7,050 odd levels with the support of 6,600 levels.
Word coming in on the diagnostic names. In the meantime, let's see what, the one island of safety from yesterday is up to. What are the staples and FMCG names doing? And are they still holding out in trade today? Of course, the top gainers today are Titan, like we just discussed. That's the one which has been reacting to its quarterly updates. BEL after those order wins. There's Cipla, there's Bajaj Finance, L&T has bounced back, SBI and Axis are some of the other names. But that's not quite the case with staples. Kunal, what is your sense? Do you think it's only on, savage days like yesterday that you will see that kind of FMCG outperformance that you did?
No, Aisha, I think there's a definite turnaround of sorts for the FMCG pack, because it started off with, I think just 2 or 3 names, Tata Consumers, Godrej Consumers, that these stocks were starting to show signs of outperformance. Marico, I think this is the 3rd name, which started to show signs of outperformance. Most of the other stocks, the likes of Dabur, for example, HUL, they were, going to a phase of correction or, more of a price consolidation. But I think after the strength which has emerged for Tata Consumers, and the other names, Marico as well as Godrej Consumers, I think what we've now seen as a pattern is that the underperforming stocks are making a comeback. So, for example, Dabur, the indicators are hugely oversold, and we expect the stock to get back into a at least a strong short covering mode, if not a very V-shaped kind of a recovery. Even the likes of HUL as well as Britannia, these stocks are now coming back towards the breakout of their minor ranged consolidation over the last 1 to 2 weeks. So that's another sign or an indication that we are looking at a revival for many of these FMCG pack. Yes, of course, the trigger could have been that the market tilts back to the defensive when there is extreme bout of volatility. But what happens is that these are the phases where sectors, they tend to break out, and you see evolving trends which last for weeks and months for these. So I believe that that's the same pattern which you can expect for FMCG.
That's that on FMCG. I also want to see what Shobha, after its Q4 update, is up to. They saw Q4 sales uptick of about almost 22%. That stock is holding up today, but there's Godrej Properties as well, where in Q4 FY25, the booking value grew by about 7% on a year-on-year basis. Ashi, what's the sense on the listed realty plays? Because most of them are a play on premiumization. If the markets do fall a little bit more, there will be that, the wealth effect, so-called, is also going to get impacted. So within the listed realty pool, would you say right now may not be the best time to add perhaps?
So We like listed real estate and we like it from a longer term perspective. We see this as one of the more attractive plays over the kind of coming decade. You are basically seeing for listed real estate, the real estate sector itself is coming out of over a decade of kind of virtually nothing happening in terms of launches, price increases, etc. There are very strong underlying demand trends. You are seeing a very clear shift away from the unorganized towards the organized sector. Regulations like RERA have basically helped remove a lot of the problems in the industry, have helped improve kind of buyer confidence. And there's also some amount of price momentum that you're seeing. A combination of all of this basically leads to a fairly favorable kind of longer term outlook. It also is clearly a direct play on discretionary consumption spends, on rising aspirations of of urban India. So there are a number of positive longer term drivers for real estate. It is, however, important to just understand that this is a cyclical kind of industry. If you are going to, we don't expect it. We kind of believe that the current market turbulence is something which is shorter term in nature as you start getting clarity on the growth revival of the Indian economy, as uncertainty around Trump tariffs come away, right? This current volatility that we're seeing in the market should settle and we should move back up. But in case there is a larger kind of a slightly longer, more prolonged weakness in the Indian capital markets, it could lead to some kind of near-term slowdown on real estate. That, however, is not our base case. We kind of expect the current positive momentum to largely sustain. You are seeing some kind of discrepancies across regions. Bangalore over the last year had some issues in terms of approvals that actually led to delays of launches, and which is where a number of Bangalore players have actually been a bit lower as compared to the pre-sale guidances at the start of the year. But if you look at kind of DLF on the other hand, the Gurgaon market continues to be extremely robust. So this is the space overall that we do continue to kind of like. It is just important to understand it will be cyclical. It is high data. So you just need to kind of make sure it's not a very large part of the portfolio possibly.
All right, so that's the take coming in on the real estate space. Kunal, what's your BTST ideas for our viewers?
So I'll go with two buy calls. The first one is on IEX. That's a chart which is looking attractive in terms of a breakout, potential breakout about the 180 marks. We would look out for 184 as a target, stop loss at 174. And L&T Finance is the other stock which I believe is showing classical signs of relative strength as well as outperformance, trading above 150 plus levels. Would look out for targets in the range of 158, stop us at 150.
Right, so that is the BTST ideas coming from Kunal. Shivangi, do you have more BTST ideas for our viewers?
For quite well, and we have seen good amount of put call ratio that has been improving in this sector. Now, Marico has shown excellent trading volumes and open interest addition in the last 3 trading sessions, with a confirmation of the price as well. And on the weekly basis as well, it has been moving quite well from the last 5 weeks, making higher lows, which indicates that supports are shifting on the higher zones. So definitely a good pick on the radar, quite resilient even in such kind of a high volatility
Shivangi, if you could
just
repeat the name once again, we kind of lost the name of the stock.
65.
Shivangi, if you could just reiterate which was the stock that you're talking about in your BTST pick?
I was talking about Marico from the consumption space with a target price of 700 and a stop of 665.
All right, so those are the BTST ideas coming in from my experts. On that note, thank you so much, Ashi, as well as Shivangi and Kunal for being a part of the show, as well as taking us through the sectors that one can watch out for at this point in time.